Over 90% of homebuyers start their journey on Google, and they're all asking the same 5 questions. Hey guys, I'm Nikki Rogers with Team Nikki Rogers here in New Bern, North Carolina, serving ENC and surrounding states. Today we're going to break down the top 5 Googled questions that homebuyers are searching when they start their journey. These 5 questions they're searching before they talk to a lender, before they reach out to the real estate agent, and honestly, before they even know if home buying is possible for them. If you're even thinking about buying, this video is for you. So let's start with the number 1 question. This shows up in 80% of searches for first-time home buyers. How much house can I afford? Great question. Answer: it depends. It depends on your income that you're bringing into the household, the debts and obligations that you have going out of the household, as well as what you're comfortable paying monthly in a mortgage payment. What that means for you is the number 1 thing you need to do to answer this question is talk to your lender. It's not a simple answer. The answer isn't you need this minimum amount of income to buy a house. There isn't a minimum. It's all based on your entire profile and picture. So the importance of sitting down with somebody and going over where you currently are financially and where you're going to be financially to then be able to tell you what you qualify for is important because it has to be customized to your situation. Good news. I've already broken this down for you in previous videos. We're going to drop that link in here so you can review that video and see where you fit in that scenario. The second most searched question actually stops people before they even start talking to somebody about buying a house, and that is, what credit score do I need to buy a house? That's a great question. And the answer is, it depends. I know you're shocked by that. It depends because each program and everyone's financial situation and their needs require a different minimum credit score. The good news is one of the main things that we work on here at Team Nikki is educating you about your credit score and helping you get your credit score where it needs to be so that you can get the program that best fits your needs. As an example, we may have a VA buyer that comes in. Technically speaking, the guideline states the minimum is 580. What you don't know is there's other rules that come with that and guidelines if that's your credit score. So what we're going to do is not worry about what your credit score is, but worry about getting you to where you need to be to buy that house. Another example, and we've also done a video on this, is down payment assistance provided by North Carolina Housing. And that minimum score, which you can see is posted on their website, says 640. Good news again. Part of what we do is to help walk you through and educate you on how to have your credit score meet that minimum of 640. And you'd be shocked at how quickly we can move those numbers. The mortgage algorithm credit scoring model is completely different than consumer credit. What that means is a lot of you are on your Capital One app, Credit Karma, your bank, and it says this is your credit score. Well, that algorithm is not the same algorithm that we pull. It's also one score. We are required to pull a tri-merge credit report. That means that we're pulling from all 3 national bureaus. We then take the middle of those scores, and that's the qualifying score for the minimum guideline. Additionally, if you have another borrower on the file with you, it's the 2, you got 3, right? You're going to take the middle score here, and it's going to be the lower of those is the qualifying credit score that we use. So what I want you to hear is it's not a one-size-fits-all, and the most important thing is not where your credit score is right now, but looking at your entire financial picture and what your needs are and what program will meet that. And then we will walk you through going from where you are to where you need to be in a really timely fashion. Now, question number 3, most Google, in my opinion, is the biggest myth in all of lending. And you'll be surprised by this. How much money do I need to put down to buy a house? Number 1 answer to this is, it depends. It depends because it's based on your situation. 9 times out of 10, though, it's very minimal. It is not, hear me, not 20% down, okay? Most folks are not putting 20% down to buy their home, specifically their first home. What I'm seeing is that we are having 0% financing, which is 0 money down. And then we're also seeing other government loans that have 3.5% down of the purchase price. That means on a $200,000 purchase, $7,000 down, that's a whole lot less than 20%. But additionally, if you're a first-time home buyer, we're going to bring in North Carolina Housing down payment assistance to help you get as close to zero as at the closing table as possible. 20% down is required on investment properties. So where you're buying a property for the reason of renting to bring income into your household. Also, folks are choosing to put 20% down because it may benefit them with their payment, their rate, and other mortgage factors. So 9 out of 10 times when you're putting 20% down, it's a choice. It's not a requirement. Now let's talk about the number 4 searched question. What are the current interest rates and will they go down? This question is not only currently number 4 searched, but if you ask me, it's always a top question and top search. It's also, I think, something that keeps people from buying. We're always looking for the rates to go down. And quite frankly, none of us have a crystal ball. We don't know what the world is going to bring us day to day. We do our best to guide you based on the economic numbers and where the market is when you need to buy, okay? So the easy answer to this is every day, every 30 minutes, the rates are changing. They go up and they go down based on many factors. So I'll just throw out where we are right now. Again, depends on the loan type. You're going to find that government financing, which is VA, FHA, and USDA, is going to see a much lower interest rate than conventional financing. Where we're seeing right now, I would comfortably say we are in the high 5s, and I am seeing some low 6s. Also, credit score is a massive, massive factor. If I have a client that comes to me and they have a 720 credit score, they're going to be quoted a completely different rate than a client with a 640 credit score. So again, it depends. So many factors go into the rate, and it's just not a one size fit all. And if I were to say the rates are trending up or the rates are trending down, but not putting it in perspective of the payment, that could keep you from buying your dream home. So bottom line is rates are always changing. We've been told that they're going to get better and better, and then they don't. And then we're told that rates are going to go up this year, and then all of a sudden something happens and we see them go down. So the best time to buy based on your rate is yesterday. This is a question that surprises almost everyone the first time they hear it. The number 5 search question is, what are closing costs? Answer to this question. First thing I'm going to answer is not what are closing costs, but how much are closing costs. Right now in our area, we're seeing an average of $7,000 for closing cost. That is cost money due at the table above the purchase price of the property. That gets broken down into 2 different categories. One is true cost of the transaction, meaning it's a one-time cost because you are purchasing this house and getting a mortgage. The other bucket is prepaids and escrow. What that means is at the closing table, we're going to be collecting funds to put in escrow that are going to benefit you for your taxes, insurance, and prepaid interest. So what I want you to hear is there's an average of $7,000, maybe a little less, maybe a little more, depending on the homeowner's insurance, the taxes, and the choices you make when locking your rate. And then what I want you to hear is that about half of that is a one-time cost. The other half of this is preparing you so you don't have to worry about taxes, insurance, and interest for the month that you're closing in. So who pays those closing costs? The closing costs are a buyer's expense, but the closing costs can be paid completely by the buyer. They can be paid by the seller, or even a portion of it paid by the seller, which your agent will help you in negotiating your contract and tell you more about that. It also can be paid with down payment assistance. If there's funds left over from the down payment, we then will allocate it towards your closing cost. Again, we have a video to show you how we can use that assistance to cover the down payment and the closing cost and get you at the table with very little down. It can be paid also via a gift. Say that you have a parent or a grandparent that wants to contribute to the transaction. They can send the money directly to the attorney to take care of those closing costs. Also, what I've seen, when we have a move-up buyer, that's somebody that currently owns their home, and has equity in the home, that they use those funds when they close to go towards the second transaction. But time out. What you cannot do is go get a loan to cover the closing costs. No, no. If you're out there using Google to get your questions answered, you're not alone. Unfortunately, I find that that's a big mistake because, as you can see, it really takes a conversation to understand what the answer is for each individual case. I'm Nikki Rogers with Team Nikki Rogers here in New Bern, North Carolina, serving all of Eastern North Carolina and surrounding states. If you are ready to have a conversation, please reach out at our phone number, 252-559-9373, or send a direct message, send us an email. We'll put all our contact information below. Again, every topic we touch today, all 5 of these questions that were asked, we've done videos about previously. So go take a look at our page and see where you fit in, and then let us customize your situation so that you can buy your dream home.